What's up, guys? Welcome back to Modern Options, where I'm here to hopefully teach you a thing or two about the options market. Today, I want to go over the 3 biggest lessons that I've learned during my time that I've been trading options. So starting off with number 1 is going to be risk management and position size. Now, I know that when you first start trading options, it's going to be pretty hard to find a quality trade that's going to actually fit in line with your risk management style. But if you go ahead and put 100% of your portfolio into each trade that you do, you are guaranteed to lose in the long run. Risk management allows you to contribute to your goal of becoming an active trader without totally blowing up your account. So what I mean by risk management is that you have to first determine how big that your account size is. So say that you have a $1,000 account. You want to at least set 2 different parameters. One would be how much of that portfolio that you do not want invested into the options market or stock market as a whole at one time. So you can set that at 50%. So meaning that if you have a $1,000 account, you don't want any more than $500 invested into the market at one time. So meaning if you happen to accidentally blow all that on a bad trade, that you still have $500 left over to trade with. And now 250 becomes your new 50% rule. So trade size is going to be that other parameter that you need to use. So this means that what percentage of your portfolio do you not want to place into one single trade? So say for a $1,000 portfolio, you don't want to put any more than 5% into a trade. That would mean that you're going to have to find positions that are not going to cost you any more than $50. You can bump it up even more, but whatever percentage that you choose, one of the keys is that you have to stick with that. Think about it this way. You can try to hit a home run every single time, and you're going to take some small losses along the way, and then all of a sudden you finally do hit that big home run that you were looking for. Your profit and loss over the whole span of you trading is probably not going to be good. That home run probably might not have saved every single bad trade that you made before. But if you try to make a lot of small plays with a lot of small wins, you might one time get that big home run. But if you look back at your trade history, you had a lot of small wins that compounded to be a large big win in the long run. So really just managing the size of your positions and then how much risk that you want to take on per trade. Now, I know you've seen a lot of different videos of saying don't invest more than you're willing to lose. That can be kind of elusive to where you say in your head, oh, I don't mind losing this $100, but then you actually do lose it. But then it freaks you out more than you had originally planned when you went into the trade. I've done this many times, fooling myself into thinking, yeah, I'm comfortable with losing that amount of money, and then I lose that amount of money, and then I don't have a backup plan. Well, your backup plan is that risk management size and how much of your portfolio that you don't want invested more than once. Now, if you just want to go ahead and do 100% of your portfolio, if you have a very small account, like say you only start with $100, you seriously have to be comfortable with losing that $100. This could be just for someone that's starting out, trying to get into the stock market or trying to play options. But just know for that the long term, once you start to accumulate more money, that strategy is not going to bode well for you. So the second biggest lesson that I've learned in the stock market is that you have to learn how to take a loss as well as setting a profit target. I can't even tell you how badly that messed me up. So I had a pretty profitable options position prior to the coronavirus pandemic when it hit this February. After the first couple of days that the market took a big hit, I just kept thinking in my head the same thing that we all think. Well, it'll go back up. Just got to give it some time. A few days later, still crashing. Well, it's going to go back. There's no way it can keep going any lower now. And then you all know how that story ended. My option expired worthless, and I didn't take any stop losses, just hoping that it would finally recover one day. Well, it didn't. I would have been in a much better position today had I just, first off, set a profit target. I might not have even been in the trade long enough to actually see that decline from the coronavirus initial drop. Taking a loss. So this just comes down to actually setting a trade plan with that first step of how big of a position size do you want, risk management for your portfolio, and then you need to know generally where your profit target is, where you're going to take profits, and where your loss is going to be if it falls below. And this can be a dollar amount or a percentage amount. So if this position falls by 35%, that I'm going to cut my losses and move on to the next trade. You have to be comfortable with knowing that you are not the best option or stock picker in the world, and you are going to make losing trades. It's inevitable. If someone on YouTube is telling you that they have a 100% trading plan where they can never lose money, they're lying to you, and that's just literally impossible. They have a plan that's very successful and can prove 80 to 90% success rate over the long term, but that is always due to their risk management and their portfolio size that they have. The third biggest lesson that I've learned is that you just have to take advantage of what the stock market gives you. You never know what's going to happen. So when I first started trading options, I had the mindset that stocks can only go up and I just need to buy calls and they're going to print money for me. Well, that just does not work at all. So if you have a high implied volatility environment, it's probably going to be best for you to sell some options, so sell some credit spreads. If a stock is stagnant and it's moving up and down and not really going much anywhere, sell an iron condor. If the stock continues to consolidate and you can see a triangle pattern, then it might be poised for a breakout. It might be time for you to buy some calls because you think it's going to go to new highs. If you can't afford positions like that because it's a pretty expensive stock, whether it's something like Amazon or Apple, then you want to buy a debit spread because that's going to lower your cost basis. You just have to learn many different option strategies and then use them to the scenario which fits best. No two scenarios are the same, and each option strategy will help you out in a different way. But unfortunately, this is going to come at the cost of experience and time in the market. If you want to be a long-term, profitable options trader, you're probably going to be in for a short period of time where you don't actually make money. But the key thing is going to be using those experiences to learn for the next time and know where you can improve on and don't do the same thing again. As long as you're constantly improving and then always trying to learn a different method, seeing what other traders do and apply that to your strategy, then you're moving in the right direction. All right, guys, I just wanted to go over the 3 biggest lessons that I've learned while trading options that I think will help you out the most, whether you're a beginner or a media options trader. So if this video was of any value to you, I would appreciate it if you give it a like and subscribe. And go ahead and let me know down in the comment section below some lessons that you've learned while you've started to trade options or just stocks in general in the market. If there's any sort of video that you would like to see me explain, please leave that in the comments below and I'll see if I can make a video about it. All right, guys, I'll catch you in the next one.